Okay, so welcome everyone. Good morning, good afternoon, good evening, depending where you are. This is Cesar Trabanco from the Global Chamber, and today we have one of our members, Luis Barreto from the GIBS Group, with base in Brazil and Portugal, leading the conversation on surety bonds and insurance when it comes to trade opportunities. And before I was talking to Luis, and he was mentioning some of the industries like engineering, constructions, and others that can really benefit of this as well. And for that, I have invited one of our members, a fellow Brazilian, Fernando Penteado, for the on trade in Madrid. Fernando is advisor of the Global Chamber in Madrid to help us and moderate this conversation, because I know Fernando probably has better questions than I in this topic. And so, Fernando, just to give you a minute of introduction, please introduce yourself, and then let's move to Luis.
Absolutely. Thank you, Cesar. Hello, everybody. I love this good morning, good evening, good afternoon. It's very, very global, no? It's our one of our marks, and the dog always reflect that on the conversation. So thank you. My name is Fernando Penteado. I'm Brazilian. I'm Portuguese by heritage. Based in Madrid since 2018, having a consulting company in supply chain logistics for all companies that intends to be global, not only on the exports, but also on the imports and strategic sourcing. My experience comes from working multinationals like Grupo Casino in France, Avon Cosmetics, and other big companies in different sectors and different industries. And I'm based here in Madrid as a global advisory for Spain, my home right now since 2018, and my home country, Brazil, that I love, and I'm at your service for all the Global Chamber members for any support, any needs you having from those two regions. Okay, and also with my consulting company on everything you need to improve your international business. Okay, thank you.
Excellent. Thank you very much, Fernando. And so now let's move to Luis. Luis, welcome. Thanks for your time today. And please give a little bit of introduction of yourself, and then let's start with the conversation. And Fernando will be managing the Q&As.
Thank you, Cesar. Thank you, the Global Chamber. Thank you, Fernando, to accept to co-mediate with Cesar this session. It's really a pleasure for me to be here. It's my first Globinar, so I'm a bit nervous, anxious to make sure that everything goes smoothly. So my name is Luis Barreto. My background basically is on the surety bond industry that we're going to talk today. I've been working for almost 30 years in this industry. I work in the first monoline surety company in Brazil. Was early 90s when I started in this field. And just to give you an idea, nowadays, at that time, there was only one company working in the surety in Brazil. Nowadays, there are over 30 companies, 30 insurance companies working in these fields there. Then I moved to a Brazilian conglomerate, and when I work in an in-house brokerage of the group, I'm managing the global surety program, which was massive in different geographies. And I founded GIBS in 2018 as an independent advisory and brokerage company. We are licensed in Brazil and here in Portugal, where I'm based now. And we'll talk about a bit of GIBS and a bit of how companies can take advantage and use surety bonds as a form of guarantee to their obligations. Just to make sure, I'm not sure if my screen is being shared on the presentation. Can you see?
No, not yet.
You can. Yeah. Right now.
Yep. So
we cannot see your screen yet, Luis. Sorry.
Can you see the presentation?
No, not yet. No.
Sorry.
If you can't, I can do it here.
Elisa, Elisa also, I think I managed to send it to you, Elisa, by WhatsApp.
Maybe
Oh,
now.
there you go, Luis.
Okay, now you're sharing, yeah.
Yeah,
We can see
now.
it now. Go ahead.
Okay,
Yeah.
great. So basically, GIBS is I founded GIBS in 2018 to be focused in this sured bond field as I mentioned. We are a member of the National Association of Sured Bond Producers. Is the largest association in this field in the world. The US market is the major market for sured bonds, and we also approved broker of the multilateral agents, African Trade Investment Development Insurance, which is one of the largest multilaterals in Africa. Just to give you a bit of background, I mean, I'm sure not everybody's familiar with the product sured bond. So I put some slides, a couple of slides, just to explain what the product is. It's a very niche product, as you may tell. I mean, it's very difficult sometimes, even in my young days, to explain what I did in terms of profession, because a lot of people were not familiar with surety. Just to give an idea, I mean, sured bond premium or the revenue of the insurance companies that work with surety worldwide represents less than 1% of the non-life insurance premium around the world. So it's a small product within the insurance world, but has a huge impact in the operation of many companies and in different geographies. As you may suspect, I mean, sured bond is a guarantee. So different from I put this illustration here, different from a traditional insurance transaction where basically a company would buy insurance to protect the property for an accident and so on. They go to the insurance company will charge a premium. If there is a loss, if there is an accident, the insurance company will pay the claim. It's basically two stakeholders that will have this contractual relationship. In the sured bond world, since it is a guarantee, there are three stakeholders involved, and the company that actually buys the guarantee is not the beneficiary. They are buying the guarantee because somebody else, which is the beneficiary, is requesting them to buy. So they go to the insurance company, the principal, as you call, or the obligor, and they apply for the guarantee, and the guarantee or the sured bond is issued for the benefit of an obligee or a beneficiary or insured, as we call. And also there is a contractual relationship between the company and the insurer and the insurance company, where basically if there is a loss, if there is a claim that the insurance company has to pay, they have the right to collect or to be reimbursed by the principal, by the company, through this agreement called indemnity agreement or reimbursement agreement. So it's a very straightforward relationship, but it's different from the traditional insurance relationship because this is a form of guarantee. Very similar to a bank guarantee. And as a matter of fact, in I would say most of the cases, most of the situations where a company needs to provide a third-party guarantee to somebody else, they can use either a bank or a insurance paper or insurance guarantee, which would be a sured bond. And why a company would prefer to use a sured bond in lieu of a bank guarantee? There are major three advantages for the company. One is...
Sorry, Luis.
Yeah.
Just 1 second. People is asking if it's possible to put on full screen mode so we can see better the presentation.
Okay, let me see. Let me put here in
Yeah,
this.
it's
Maybe.
Yeah, I think now, yeah.
It's better now?
Yeah.
Okay, so
A bit better. Thank you. I'm sorry to interrupt.
No problem. Thank you. So the three advantages for the company to buy a insured bond instead of a bank guarantee is, first, if the company will take a bank guarantee, they will have the credit line in the bank reduced. So that means that they will have less credit to take, for funding purpose with the bank, for example, for working capital facility and so on. The second advantage for surety is that, generally speaking, of course, it just depends on the country, depends on the type of guarantee, the company, and so on. But overall, one could say that sured bonds are less expensive than bank guarantees. And that's very straightforward. You pay less for a guarantee. And the third advantage is that a lot of the banks would request for them to issue a guarantee to a company. They would request a cash collateral or some sort of other type of collateral, like property, a pledge of property, a lien, and so on, to provide the guarantee. As compared to the insurance companies, where basically the insurance companies would only request a corporate guarantee from the indemnity agreement that I mentioned before, or reimbursement agreement. And very quickly, I mean, we as GIBS, what we do, we basically support companies, we support brokers. We do a lot of business through brokers because since surety bond is a guarantee, is a credit-driven product, a lot of brokers, insurance brokers, they don't like to work. They prefer to keep their business on the traditional insurance products. Since also surety bond is quite intensive, the underwriting is quite intensive, a lot of paperwork, a lot of we have to provide the financial statements of the companies. The underwriting of the insurance companies is very similar to a banking underwriting. So we do a lot with brokers worldwide, especially in Brazil, of course, but also we have partnerships with Lloyd's brokers in London that don't have experience in insurance, here in Portugal as well. We also provide support to beneficiaries of the guarantees. Sometimes, and I think I would say especially in project finance or structured finance transactions, where the lenders are concerned about a completion risk of the project or a performance risk of supply equipment and so on. We structure a guarantee that will benefit the lenders and the capital or the lenders funding providers of those projects. And we also do a little bit of single risk credit insurance, which has some similarities with surety. I brought a couple of examples on credit insurance as well that become more clear how it works. We tend to respond fast to the inquiries. It doesn't mean that we place or we do the business on very fast. Honestly, is sometimes the business that we handle is more complicated, it's more complex. It takes time to put together. But we tend to be very fast in provide the first response to the brokers, to the companies, whether we would actually work with that transaction, whether it would be feasible or how that transaction could be feasible in terms of counter guarantee to be provided, in terms of markets to be assessed. Generally, we are called for the complex transactions, especially companies that need surety bonds or guarantees outside the home country, where generally they don't have assets in the foreign country, or the broker don't have experience in that specifically country. So that's why we do a lot of international business in that sense. And of course, what we bring to the table is our relationship with the markets to make sure that we assess the right markets for the right transactions. And I'm talking here about local insurance companies, regional insurance companies, or the global insurance companies that are active working with surety bonds. We place, and this is not only GIBS, but this is also my experience and my experience in my previous role. We have placed or work or handle about $20 billion US in surety bonds in different geographies in Latin America, US, Africa, Europe, UK. This represents about $500 million in premium that we handle. We worked also in the past, and we are working currently in a couple of transactions that basically put together multilateral agencies or export credit agencies in partnership with the insurance companies to support the surety bond transactions. And as I mentioned before, we also work on complex transactions in project finance, structured finance, mostly supporting the beneficiaries. So I brought here some cases that I will go through very quickly, but I think it would be interesting for you to get a sense what we're talking about and perhaps identify some cases that could be applied to your business, to your situation. The first one is basically a program that we supported in Brazil for one of the largest telecom company on the 5G auction or concession project. And here, a side comment I would make is that the major market for shorted bonds, of course, is public infrastructure in general, because in most of the countries, if not all the countries, when you have when it comes to public bids, either a pure procurement transaction, a concession, or a public and private partnership, the private entity needs to provide a guarantee to the government that they will fulfill the obligations, that will come up with the obligations under the contract, and that has to be guaranteed by either a bank guarantee or a surety bond. So in this particular case in Brazil was the auction of the 5G network. We supported this telecom company. They actually have an in-house broker, insurance broker in the group, so we work with them, and we placed it close to $1 billion in surety bonds. And the way we did was we call co-surety or co-insurance in the insurance world. That would be like a syndicate of 11 insurance companies in Brazil, so as we could put this important capacity available to the company. This transaction was a surety bond that we issued out of UK because the beneficiary, this company, Oil Spill Response Limited, this is like a mutual company that basically oil and gas company is a member of this company, and as a member you have the right to use equipment in case you have an accident, you have an oil spill, for example. You can use these equipments to mitigate the impact of the accident. And the contract, in the contract with the company with oil spill, the member has to provide a guarantee that if they take the equipment to mitigate the impact of oil spill loss, they would return the equipment at the same conditions that they took in the first place. So in this case, this was a Brazilian oil and gas company. We supported the broker, where basically they subscribed the right to use two equipments. The value of the equipments was $50 million, and they have to place this bond in favor of oil spill response. And since oil spill is a UK-based company, they required the surety bond to be issued in London or in UK, what we did with a multinational insurance company. Africa, it's a market that is growing, especially we deal a lot with Angola because of the links with Brazil, with Portugal, a lot of foreign contractors doing business there. Most of the contracts are public contracts, so by law they have to provide performance guarantees or surety or advance payment guarantees. We work with this German contractor in the past, $144 million contract. This was a two roads projects in Angola. And we placed $6.2 million in performance bonds. This is a Portuguese contractor, a water supply system, $220 million contract, $10 million in terms of performance bonds. This is a payment bond that we had arranged for a petrochemical company in Brazil. Payment bonds are not very popular, to be honestly, in the insurance world because the underwriters, they perceive that it's a riskier type of guarantee because it deals with the payment obligation, it deals with liquidity of the company, even though it's widely used in many countries. This one was basically a petrochemical company that was using a pipeline to get gas. That was the feedstock for the plant. And they have to present a guarantee to the owner of the pipeline that they would pay, the monthly obligations under the gas transportation contract. But that was an $8 million contract. For us, this was an interesting project because since payment bond guarantees is not very popular in Brazil in terms of capacity from the local market, we have to go directly to some reinsurers to negotiate with them the ability for them to support the insurance company in Brazil that issued the bond. This is a not a specific project, but a huge program for one of the largest Latin American financial services group in Brazil and in some countries. It's very popular judicial bonds, especially tax appeal bonds, which means basically is that if a company wanted to fight the tax authority because they don't agree with the amount of tax they have to pay, they need to post a bond, a guarantee that basically if they lose the case, they will have to pay the amount of the tax they lost. If they don't pay, the guarantor would pay. The insurance company or a bank would pay. So it's quite popular in Brazil because it's a long tail. It's a long-term type of guarantee because the lawsuit sometimes takes years to get resolved. A lot of large corporations, they get huge exposure in the market, so they always need for new players to support them in terms of insurers and reinsurers. We support one of the largest multinational brokers that were supporting this financial services group, and we basically organized for them a roadshow to meet international reinsurance companies that were not very active in Brazil, so they didn't have much exposure in Brazil. They would have balance sheet to provide capacity, and we make a roadshow to present it, introduce the product, introduce the Brazilian market to them, and the financial services group as well. Another transaction in oil and gas. This is a JV, a joint venture between a Japanese and a Brazilian contractor. It's a contract with the Brazilian national oil company, Petrobras, $370 million. We issued $37 million. This is a traditional performance bond, as we call, not very complex here, but it's an important contract in terms of value in the Brazilian markets. Paraguay, I mean, just to illustrate that we're also very active in other countries in Latin America. This was a contractor that won a contract in Paraguay, engineering construction project. Paraguay, in terms of surety, is not a big market, it's not a huge market, but there are a few specialized insurers that write the bond or write the product, and we did that for this foreign contractor there. And this one is interesting because in UAE, United Arab Emirates, it's not very usual to see insurance paper or surety bonds. Most of the transactions or the contracts are guaranteed by banks. But since this was a private owner of the project, this is a new oil storage terminal. The private owner agreed to receive an insurance guarantee instead of a bank guarantee, and we placed this in a regional market. The total amount of the contract was $240 million, and we placed $36 million in performance and advance payment bonds. The advance payment bonds basically guarantee that the amount of the money that the contractor gets in advance when they sign the contract, it will be used actually in the contract that it was hired. And finally, this is the case of the credit insurance I mentioned. Credit insurance, it's basically, guaranteeing payments obligation, mostly related to trade transactions. So it's a very wide product to use it worldwide. We deal mostly with at credit insurance for transactions that will benefit lenders. So in this particular case, this was a Brazilian contractor that was getting a working capital finance from a trading company. So they would buy equipments to the contract that they have to perform. And they gave as guarantee to the trading companies the receivables of the contract. And we basically are structured a credit insurance where basically the contractor protect themselves from the risk of payment from the project owner that they assign or they gave the receivables as guarantee. And we assign the beneficiary of the credit insurance to the trading company that was financed the equipment. So this is very interesting because this mitigates not only credit risk, but sometimes political risk. If it's an export transaction, for example, political risk for lenders of the financing transactions. And then, I mean, as I mentioned, I mean, the use of surety bonds, you can use honestly in any industry. We have done a lot of transactions in the real estate industry as well. It's very, very common in certain countries. Reforestation projects, information technology, companies from IT sector that sometimes they don't have strong balance sheet because it is a service provider. So they have some difficult sometimes to get credit from banks for bank guarantees. The insurance companies, they were able to do a more deeper underwriting and providing surety bonds for this sector as well. Renewable energy, of course, it's a growing industry, and all of these projects, especially here in Europe, you see and lots of opportunities for guarantees. And there are also the type of suited bonds that can be unique for some countries. For example, there are custom bonds or custom suited bonds that basically are guarantees that companies provide to the customs of the country if they, for example, if they import an equipment and they will export the equipment later on. So instead of paying the importation tax, they suspend the obligation, but they have to provide a guarantee that they will actually export the equipment. As I mentioned, judicial bonds, there are tax appeal, there are labor disputes as well that could be guaranteed by surety bonds. License bonds is very, very popular in the United States, for example, for regulatory reasons. So it's really a product that has application in really different industries and different types of obligations, and also in many countries. And of course, because it is within the insurance industries and regulated by the insurance industry is subject to the local regulation or the country regulatory environment of the insurance industry of that particular country. And that's it.
Yeah, thank you, Luis. Very interesting subjects. I think for all of us that are involved on the international markets, know the surety bond is an important point to take into account because it's safeguarding the failures on the performance and so on. So it's a very interesting subject to review, and all of us are involved on international markets. So it's a very interesting point. Thank you for sharing all of us with us all this information with us. We'll start with some questions that I received here. It's critical that the company does need to hire a surety bond provides as much information as possible to the insurer. Question is that what sort of information and the documents should the company need to provide in the application process to insurers?
Yes, the way that we handle the company's relationship with the insurance underwriters, I always say to the company, you need to treat the insured bond underwriters the same way you treat your relationship with your banker, or if a company use capital markets, and the same thing that you do with your capital market investors. You have to be very transparent. You have to provide as much information as you can, because at the end of the day, the insured bond company or the insurance company is a partner. It's basically a partner guarantee your primary obligation in whatever is the obligation that you ask them to guarantee. So not only, of course, financial statements is critical, is important, is the official, let's say, documentation that you use to apply for a credit, but it's very important to provide the historical information of the company, the ownership structure, strategy of the company going forward. Depends on the availability. It's important to meet, of course, the underwriters to provide background information. And then you have to provide also a lot of information on the underlying obligation that you need the company to guarantee. So if it is a construction project, the underwriters want to see, of course, the draft of the contract. They want to see the cash flow projections. They want to see the construction schedule. They want to understand whether there will be subcontractors involved, what sort of guarantee the subcontractors may be providing to you as the main contractor, and so on. So those would be the set of information that the underwriters would like to see in an application of a surety bond transaction.
Okay, thank you. Very interesting. Another question that we have here, Dwight has asked how does the surety bond compare with standby credit letters come using to secure advanced payments? And I think that you kind of giving some answers about that, but I think it is important to let's say review again. What are the key drivers insurers would consider to price a surety bond?
Yes, very good question. I mean, the overall pricing or the final pricing of insured bond, it depends a lot of external factors as well, not only the underlying risk. And I go first on the external factors, because since the bonds need to be issued within a certain country with their own regulatory environment, with their own dynamic in terms whether there is availability of insurance companies that are able to provide insured bonds or not. So supply and demand also is a driver. The type of bond, whether it is an unconditional or conditional bond, that's something that I haven't touched, but an unconditional bond where the beneficiary can call without even proof that they had a loss is perceived as riskier from the underwriter, so that tend to cost more. And then, I mean, that is the set of factors that basically are at the basis of analysis of the insured company. I mean, the credit worthiness of the company is one of the main drivers. As I said, the experience with the underlying obligation that it has to be guaranteed. So if it's a company that has experience on building residential projects, and they come up with an application to a guarantee to build a bridge, so that would be perceived as risky. So not only the underwriting of the insurance company will be tighter to understand how they would be able to build the bridge, but also most likely the pricing would be higher than an average price of the company. And to give you numbers, and I'll give you a wide range of figures here, because again, it depends on a lot of stuff, but you have bonds coming from 0.5% per annum, 50 bips per annum, to 4% per annum, to 400 basis points per annum. And that's the range that you could see pricing on insured bonds in different geographies.
Okay, good. Very, very good insights. Thank you. I have a couple of questions here, but let's give word to Peter. Peter has raised their hand, so Peter, go ahead with your question.
Yes. Hello. Bom dia, gente.
Bom dia.
Bom dia,
So
Peter.
my firm works in trade and project finance. We're based out of Washington, D.C., and we work with export credit agencies, development finance institutions, and we definitely run into a few areas where surety bonds are valuable, in a few areas where there may be some opportunities for collaboration. Obviously, the case where there's a project in a country where there aren't existing assets and a surety bond can be used as collateral, that's a very common scenario that we see. Another one is on the right of recovery. We do a lot of investigations, due diligence, and recovery work, really starting from ECAs, export credit agencies, and DFIs. So for example, we've been doing this kind of work for XM for the last 20 years. We do this work for a lot of European and Asian entities. And so in what you were saying, I think that there may be some opportunities for us to potentially collaborate. I assume that a lot of the work that you do, there's guarantees from entities such as this, especially the ECA work. I'm assuming that that's your model. And so if you don't have relationships with some of the ECAs where we do, there may be some opportunities to begin conversations there. And then on the last side, as I mentioned, we do recovery work, and you mentioned that there was right of recovery. Usually what I've seen is that you're approaching the reinsurance market in order to that's who will ultimately be holding the note if any transaction runs into distress. But in any case, that's one of those areas where my firm directly can assist with recourse. We've done recovery work in 129 countries. We have networks of legal firms, et cetera, et cetera. So I just wanted to kind of throw those things in. Is my understanding kind of correct? Do you want to add anything that you think might be valid? And then otherwise, I think we should just connect offline in order to explore some opportunities for collaboration.
Thank you, Peter. Absolutely. And in my previous role, for example, we have done a number of programs. We did a program with IFC from the World Bank, so they would they would issue a guarantee as a kind of a cash collateral to leverage capacity of insurance companies, for example. But what we're seeing also that I think would be useful to explore, we've seen more and more the banking industry also collaborating with insurance companies in guarantees. And this is sometimes because in some geographies, insurance paper is not acceptable. Some beneficiaries, they prefer to accept a bank paper, and for different reasons. And then you have paying the guarantee to the insurance companies that will provide capacity behind the bank. That is one structure. And we also see banking collaborate with insurance companies, because sometimes banks have clients that has already taken all the credit limits, they are full exposure, and instead of letting the client go to another bank and getting a guarantee, they call, and then you have insurance companies providing support to the banking behind, so they can assign more guarantees to the client. So you see more and more, especially here in Europe, you see more and more insurance and banking partnered on guarantees. So that's something to keep in mind as well.
If I can just follow up real quickly, Luis. So are you seeing banks actually providing the guarantees and holding that note? Or are they also going into the reinsurance market? Because it may just be the circles that we work in. We tend to see all of the final paper end up in ECAs or DFIs. But if you're seeing activity where the banking community is the one that's holding the note, again, there may be opportunities for us to leverage our networks together for each of our organizations.
Yeah, absolutely. I've seen that. I mean, some of the insurance companies and some specific banks, they already have like umbrella programs where basically they set up, guidelines and so on. They start, partnering. It's not something that you see. They don't make it public too much, because it's not that the banks they like to partner with insurance companies all the time, but definitely is something that we've seen, and the banks definitely taking the note as well.
Thanks.
Okay, good. Thank you for joining the conversation. I think that's the idea of these Globinars, we acquaintance and having business opportunities. We also have connected Hammond Burke. He has a company that has a task management app for surety bonds. So maybe after my next question, Hammond, you can join the conversation. Dwight, asking about your international experience. You talk about Angola, no? But what countries in Africa have you worked with? I mean, do you have an experience with the African market? You can talk about a little bit about this part of the world.
Yes, I mean, definitely. We've seen the transactions that we seen, and we have worked in most of the African countries are basically, I would say most of them, not all of them, but most of them foreign contractors doing infrastructure jobs. And not only Angola, but Mozambique, South Africa. We are working now in a project in Ethiopia. So it's different countries. It's an interesting market, because of course Africa is huge. There are different countries in different situations, but at the end of the day, in a number of those projects that we work, you see there are a lot of risk mitigants in place, and regional players, regional insurers, that they are more familiar with the risk of those countries. They are the main providers. If you go to the large international insurance companies to request support for projects in those countries, they put a lot of difficulty sometimes to support, because either they don't know, they don't have some interesting, because they don't see scale at this point in surety, even though they do insurance. But there are some regional players that they are risk takers in this region, and the foreign contractors that are active in those countries, generally they have good balance sheets, they have experience in those markets. Sometimes they bring the finance, as Peter was mentioned before about the export credit agencies. They bring the finance from the export credit agents from their country or multilateral agents to the government. So the government wanted to do really partnership with them because they see the contractor as a source of funding for the projects. So it's a quite interesting, and we've seen, of course, a growing opportunities in Africa, especially in those countries. Angola, definitely. South Africa is already a market that it has a established industry in surety and credit insurance as well. But definitely is a region that we are very active, and we see a lot of opportunities to support. You are mute, Fernando.
I'm in mute, sorry. Thank you for the comments. Hamon, not sure if you want to join the conversation, talk a little bit about your task management app, if you're available.
Sure, I'll give a brief description. My company, Sheldon Media, is actually it's a software engineering company, and we have a client in the surety bond space that we built a product for that basically automates a lot of the processes of the surety bonds. And so this company was losing a ton of money because of some of the tasks involved. So they were getting literally fined because of missing these tasks. And so our application allows them to stay track on the tasks that have to be performed. In regards to surety bonds, it will send automated alerts, helps with invoicing. It does a lot of the automation. And so they've actually allowed us to productize this product. So Shelf Tracks is a result of that product. So we literally just launched it over the past few weeks. So it's brand new, it's still in its infancy. But the idea is for it to just kind of help bring automation and efficiency to the whole process.
And this is thank you for your comment. This is very interesting because there's a lot of discussions, and I think if you look at the overall industry, surety bond industry in certain countries, there has been a lot of advancing in terms of information technology, especially for SMEs. I would say, I mean, insurance companies that are focused on SMEs, the underwriting process is more standardized, if you will. And you have companies that has invested significant amount of money in having automation of the process, credit approval in an automated way, link it to the credit bureau information, and you've seen that a lot. For example, I'm very familiar, of course, with the Brazilian market. I would say that most of the companies in Brazil that issues surety bonds, the insurance companies, they have platforms available to brokers. In some cases, or especially again for SMEs, the brokers are able to issue the bonds electronically. So the whole process is handled electronically: the approval of the credit, the approval of the bond, the issue of the bond. And something that we see more and more companies definitely looking at. On the other hand, I mean, in my world, where I deal more on cross-border transaction, on more complex transactions, that's something that's very difficult to have the platform, IT platform handled. There has to be a lot of paperwork. There has to be a lot of conversation to assess the risk, and that's more challenging, I would say. But definitely, IT is very important, especially for markets that still are in early stages. I think that's very important, very critical, because that allows the insurance companies to get scale quickly and to market the product quickly and compete very efficiently with banks, for example. And we've seen that again. I've seen that in Brazil and in other countries. It's a very interesting topic.
Thank you. Yes, our company, we position ourselves to kind of be the IT backbone of the surety bond company, so that a lot of the things that fall through the cracks are no longer an issue. Thank you.
Very good. Very, very interesting. Thank you, Hamon. Luis, another question here is that what would be the consequence for a company if it's caused a claim loss to the insurance company, mainly because of financial distress or any other variables?
Yeah. Interesting. Very good question. I mean, the one thing is in surety is that the underwriting, they call that the underwriters they would underwrite on a zero loss basis, which means that they wouldn't expect a loss. Of course, loss happen, claims happen, because companies can go busted, companies can litigate with their clients and so on. But in theory,
Not a perfect word.
exactly.
Yeah.
But in theory, there is really not much, actuarial analysis behind as you have in an auto insurance program, for example, that you expected from the X amount of cars will hit it and you have a loss, etc. And the other thing is, again, this is a guarantee. So as I mentioned before, I mean, the relationship that the company would have with your insurance company is the same of a capital market investor, a creditor, a bank. Is the same thing on a loss situation, on a claim situation. If the company is not there, if the company let the bond to be called and let the insurance company pay the claim and not really deal with the insurance company to fix the problem, they would be perceived as a company that is not fulfill their obligations. And in the insurance industry, since you have reinsurance behind, since you have a network of insurance companies that also providing support behind the insurance company, you are basically on the blacklist of the whole system. Depends on if you are a company that operate in a particular country. If you default with one insurance company, you are default with the whole system, because the insurance companies that provide support for that specific country are supporting other insurance companies as well, and they just say, look, I cannot provide capacity to that specifically contractor, for example, because they are in default with insurance X. So this is very, very important. Of course, companies sometimes they can go busted, so it's difficult to deal with that. That's situations where you cannot really negotiate with an insurance company a loss. But there are situations where you, as a company, might be going through a stress, liquidity stress situation, and you might have problems in a specific project, and that might become a loss. But if you open the problem to your insurance company, if you call an insurance company or provider of the insured bond to work out the solution, you might be successful in avoid the claim, or at least avoid a loss to the insurance company in the long run.
Good, perfect. Santosh has a question. Santosh is our executive director in Bengaluru. Have you handled surety bonds for agri exports from Asia?
Not specifically from Asia. We have done transactions on export of sugar and of soya in the past, not really recently. There are some, I mean, in this industry, there has been some important historical losses, honestly, especially the sugar, pre-export finance of sugar guaranteed by surety bonds. So I would say that overall, underwriters are not very excited about the industry, but definitely there are cases that can be supported, and I would say most of the cases would be to support the company to find funding, financing. Not only a client and an important and exporter relationship, but somebody else that will provide a pre-export finance to the export company. So yeah, we can do that. We have markets that can do that, of course. We haven't done anything specifically in Asia though.
Okay, good. Let's see, there's another question. No? Does anybody has any other questions or comments? You want to jump on the conversation and make some comments? Okay, it appears not. So, Luis, I think that we are reaching the end of this conversation. I mean, very interesting subjects, and thank you for sharing with your 30 years of experience on this field. I mean, it's very, very interesting, and the presentation we have your contact details. So anybody that wants to connect, you can reach Luis on the network, and to reminding that we, as a global chamber, we have a lot of events worldwide. This is one of the examples of the the events that we are handle at the global level. So it's very important for all of us to listen to your experience.
Hello, I got a question. Hi, my name is
Yeah,
Claire.
sure. It's still in time.
Oh,
Still have
I'm
4
not just
minutes.
related to sugar or export this and that, but I'm just curious about the ban bond or bond ban. What's the difference? Because I'm not come from the banking system, and I do have projects in the film and entertainment industry. Might be possibly seeking the ban bond or bond ban. So I was wondering, do you guys do the bond ban or ban bond?
I'm not familiar. You mean a bank guarantee or the difference
Ban
between
bond, yes. Ban bond or
bank?
bond ban.
Yeah,
The bond.
the bank guarantee. I mean, the difference between the bank guarantee and the surety bond, I would say that in most of the cases, a bank guarantee would be an unconditional instrument, or as you say, on demand, where basically the beneficiary can call without even prove there was a loss. Whereas surety bonds tend to be, not in all countries, but tend to be conditional instruments, where basically the beneficiary needs to show to the insurance company what was the default of the contractor or the principal and what was the loss. That's pretty much the main difference between bank and surety bond, even though in countries like Portugal, most of the countries in Europe, I would say, the surety bonds, they are also unconditional, especially for public jobs.
I see. So the European bond or Portugal bond, can you do this bond for the US company?
Yes, I mean you can, not banking, right? We don't deal with banks, we deal with insurance companies, but we can do for any company in the world in different geographies. And if it's a US company needing a bond in Europe or in Asia, I mean we can definitely save on that as well.
And the business project space can be entertainment too.
I'm sorry, Claire, can you repeat the question?
Business project can be an entertainment industry.
Yes, it could be. It could be. When we say entertainment industry, you mean like moving, film?
Yes.
Yeah, yeah. It can. Even though film, the bonds for film industries, they call completion bonds. There are not many underwriters. I mean, it's a niche
Yes,
within a
it
niche.
is.
Yeah,
That's
it's
right.
very
It's a niche.
popular in Los Angeles, in Hollywood.
That's right. Correct.
Yeah, and I think a couple of companies in UK, they provide financing and they provide guarantees. It's not very usual to honestly to have insurance companies providing completion bonds because it's more difficult to underwrite, honestly, because you are dealing with cost overruns due to problems with actors or the actors. So it's more complicated. Even though I never say we cannot look at, we always can look at and see. I mean, what is the company behind? What is the indemnity provider behind? Because it might be an important, a financially sound company that can provide indemnity. So that will open doors with insurance companies. Absolutely, we can look at it, but that's a bit of the reality of the market.
Well, thank you so much, Mr. Orecto.
Thank you.
Yeah, where are you from? Are you Italian or Portugal? Sorry.
No, I'm Brazilian.
You're Brazilian. Okay, great.
Brazilian.
Are you based in Brazil right now? In Brazil?
I'm based in Lisbon, in Portugal.
Lisbon, Portugal. Okay, great.
Yes.
Fantastic. How about we connect on LinkedIn and you find my contact, Claire Chen. I'm also from the BTT, one of my members.
Excellent. That would be great, Claire. We connected privately. Absolutely.
Yeah, Luis.
Definitely. I will look it up the contact through you, either the insurance bond from you or the recommendation from the UK. Thank you. And
thank you very much.
We'll stay in touch. Thank you.
Luis, if you don't mind, I just share with the audience your LinkedIn profile.
Thank you.
So everybody can reach you on the LinkedIn and of course looking for business opportunities around the world. Okay. So thank you, everybody. Thank you, Luis, again for your very good presentation. Yeah, it's very clear for me, and I think of most of the audience. And again, thank you to everybody that joined us in this Globinar and following our network for additional discussions on international trade and other interesting subjects. Okay, as Doug say, being global and unstoppable. Thank you, everybody.
Thank you, Cesar.
Thank you so much,
Thank
Global
you so
Chamber,
much.
making this
Thank you.
Thank you.
organize this event. Thank you.
Appreciate it.
Thank you, Luis. Thank you,
Bye.
Fernando.
Thank you, Cesar.
Bye.